We're speaking now with Tanner Ehmke, who is a senior economist with CoBank. And Tanner, as we look at what's going on in agriculture right now, obviously the challenges are going to be here for a while longer. We probably haven't quite hit that ready to bounce back up yet spot.
Right, yeah. Our long-term outlook is that given our supply scenario throughout the entire world on not just grains and oilseeds, but all commodities, and given our currency situation, that we have got a strong dollar in comparison to our major competing exporting countries, specifically Russia, Brazil, and Argentina. This is a cycle that we're going to have to work through on price. That's the only way we're going to be competitive on the export market, and we've seen some improvements on exports, especially corn and soybeans, but even wheat, and it's been a hard fight for wheat to get down to these price levels to where we can be competitive on the export front. But given that our exporting competitors are also carrying a lot of grain right now, and they're going to be having that advantage of cheaper currencies going forward, it looks like we're going to be down here for a while.
As we talk about the currencies, we have the new president-elect has come out and said China has been a real problem. Is there much to that, or is that something that we're going to have to work through in this whole situation of trying to figure out exactly what we're dealing with?
Well, China has actually been supporting their currency, so they haven't been keeping it artificially cheap, as I think that was the insinuation there that he was making. It's been the opposite, actually. The bigger concern is our competition for the export business, not the buyer, not China. They remain a very important market for us, and as long as Brazil and Argentina have got cheaper currencies, and assuming we don't have any weather problems down there with their new crop that they're currently planting, it's going to be a pretty tough, competitive, a very competitive market to deal with here in the future.
Well, let's go back stateside in a sense, because as you know, every place we go, every small community seems to have grain on the ground. We have empty train cars, that are unit trains that are full of wheat in places like in Kansas.
Oh, sure.
We have soybeans everywhere. We have corn and sorghum then on the ground. People are looking at next year and going, well, with the glut we have, where do we go, and where are you seeing as we move forward? I mean, how long are we going to have to push through this before we can get back to where it really makes sense again?
Well, USDA in their most recent report is calling for the biggest corn and wheat inventories since 1987-88 crop year. So we're going to be carrying in a lot of grain into next year. So when you've got that supply pressure and such a high stocks-use ratio for corn and wheat, and now we're also seeing apparently USDA changed their mind on beans even, on the size of the bean crop. The only way we're going to be able to clear this inventory is through price. So as for the farmer, what that means is they're going to have to be very cost conscious, and they got to know their break-even cost of production. Because remember what happened earlier this year. We had a marketing opportunity back in June with corn prices going over $4. And how many farmers took advantage of that? Not very many. Right. The best estimate I've heard is about 30% of farmers saw that profit opportunity and they took it. Farmers are going to have to be more disciplined this time around on cost and on marketing if they're going to make 2017 work.
Well, it looks like some challenges ahead. It'll be interesting to see as we get through the winter what happens in those final planning decisions in the spring.
Sure.
To see as we move forward. So, well, again, everything at CoBank, continue to keep up the good work, and all the challenges are ahead, but thanks for everything you do.
Oh, thanks, Ken.
Tanner Ehmke, who is a senior economist with CoBank, has joined us from Kansas City. I'm Ken Rogers.